In a move that has stunned the world, Canadians are turning away from American products, canceling US vacations, and cutting economic ties like never before. Store shelves in Canada are seeing fewer US brands. Airlines are reporting a sharp decline in Canadian travelers heading south, and businesses that once thrived on cross-border trade are feeling the squeeze. But why now? What pushed Canada to this breaking point? This isn't just a passing trend, it's a nationwide movement driven by rising tensions, economic retaliation, and deep frustration with the United States. Some experts believe the latest round of US tariffs and trade policies have unfairly hurt Canadian industries, making it harder for them to compete. Others argue that this is a political and diplomatic rebellion, fueled by a series of controversial US decisions that have alienated many Canadians. And as tensions rise, the rest of the world is watching closely, waiting to see what happens next. Will this boycott force policy changes? Will it escalate into something even bigger? Or is this the beginning of a long-lasting rift between two of the world's closest allies? Stay with us as we break down the key moments leading up to this dramatic shift. How the trade war escalated. Canada and the US have been locked in a tense economic tug-of-war. Trade disputes, political disagreements, and broken deals have stacked up, pushing relations to the brink. But this time, Canada is fighting back like never before. Tensions first flared when the US imposed harsh tariffs on Canadian steel and aluminum, striking a major blow to some of Canada's most vital industries. These tariffs sent shockwaves through the Canadian economy, leaving manufacturers scrambling and putting thousands of jobs at risk. In response, Canada hit back with tariffs of its own, targeting iconic American products like dairy, ketchup, and whiskey, industries that hold deep cultural and economic significance in the US. This trade battle escalated quickly, with both sides refusing to back down. But the real tipping point came when US President Donald Trump pushed for a renegotiation of trade deals that heavily favored the US. The demands were seen as unfair and aggressive, sparking outrage in Ottawa and across Canada. The pressure to concede was met with fierce resistance. That's when Canada finally said, "Enough." The time for diplomacy had passed. The response? A full-scale economic boycott of American goods and travel, marking a historic shift in North America's economic landscape. That was the moment Canada said, "Enough." Canadians from all walks of life began rallying around a new movement, not just government-level trade retaliation, but a full-scale public boycott. What started as political frustration quickly turned into an economic rebellion, with everyday citizens and businesses making a conscious decision to cut ties with American goods, services, and travel. The movement spread like wildfire, and soon the effects became impossible to ignore. So what does this boycott actually look like, and just how deeply is it shaking the US economy? Canada's boycott begins, what it means. So what does Canada's boycott actually look like in action? It's not just a small protest, it's a nationwide movement shaking up industries on both sides of the border. The boycott is hitting the US in three major ways, each one sending a shockwave through the American economy. The first and most visible impact is the shift in consumer behavior. Canadians are deliberately avoiding American-made products, opting instead for local or international alternatives. Major retailers such as Walmart and Costco in Canada are reducing their imports from US suppliers, replacing them with goods from Europe and Asia. Everyday purchases that once seemed routine, like grabbing a Starbucks coffee or buying groceries from US food brands, have now become political statements. McDonald's Canada has seen a noticeable decline in sales, as more Canadians choose homegrown burger chains over the American giant. Starbucks, once a staple in urban Canadian life, is struggling to compete with the rising popularity of independent coffee shops that promote local products and sustainable sourcing. This consumer rebellion is not just about preference, it's about making a statement that Canada will no longer be dependent on US goods. The boycott isn't just affecting shopping habits, it's also disrupting the travel industry. The US has long been the top destination for Canadian tourists, with millions traveling south every year for vacations, shopping, and entertainment. But that trend is reversing. More and more Canadians are canceling trips to the US, choosing instead to spend their tourism dollars in Europe, Mexico, or within Canada itself. The decline in Canadian visitors has already made a significant dent in the US tourism sector. Orlando, a top vacation spot for Canadian families, has reported a sharp 25% drop in Canadian tourists this year alone. Las Vegas, another major destination for Canadian travelers, is feeling the loss, as fewer Canadians are filling casinos, restaurants, and hotels. Even New York's famous shopping districts, once bustling with Canadian shoppers, are seeing a decline in foot traffic. The economic strain on these cities is growing, as fewer Canadian tourists mean fewer dollars flowing into local businesses. Beyond consumer choices and tourism, Canada's economic separation from the US is reaching even deeper levels. Canadian investors are pulling their money out of US markets, redirecting their capital into European and Asian stocks instead. There is growing concern over the instability of the American economy, and many Canadian investors are no longer willing to take the risk. This shift isn't just about finances, it's about long-term strategy. Canadian tech companies are also making moves, choosing to store their data in European data centers rather than in the US, citing security concerns and growing distrust over American data policies. Even supply chains are being restructured, with Canadian businesses looking toward Europe, the UK, and Asia for imports and exports rather than relying on American suppliers. This movement isn't just a temporary reaction, it's a structural shift in how Canada engages with the global economy. With each passing day, the economic ties between Canada and the US grow weaker, and the financial consequences for both nations become more apparent. The numbers don't lie. America is feeling the pressure, and it's only a matter of time before the full impact of this boycott is realized. The economic impact on the US, a costly mistake. As Canada's boycott gains momentum, the economic consequences for the United States are becoming impossible to ignore. What started as a political standoff has evolved into a full-scale economic disruption, sending shockwaves through key American industries. The effects are being felt across agriculture, retail, and even the airline industry, with businesses scrambling to adapt to the sudden drop in Canadian consumers. One of the hardest-hit sectors is American agriculture. Canada has long been a top buyer of US dairy, beef, and produce, but with import bans and consumer-led boycotts in place, American farmers are facing severe losses. Dairy farmers, already struggling with fluctuating global prices, now find themselves with excess supply and fewer international buyers. Beef producers and fruit growers are feeling similar pain as Canadian grocers shift to European, Australian, and domestic alternatives. For many in the agricultural industry, the Canadian market wasn't just important, it was essential for survival. The retail sector is also reeling from the boycott. Big box American retailers like Target and Macy's, which rely on cross-border shoppers, are reporting steep declines in Canadian foot traffic. Shopping destinations that once welcomed a steady flow of Canadian visitors, from malls in Buffalo to high-end stores in New York City, are seeing sales plummet. The economic strain is trickling down to employees as well, with layoffs and reduced hours hitting workers in retail hubs that depend on Canadian spending. The impact extends beyond shopping and agriculture. Airlines are feeling the pressure too. With fewer Canadians traveling to the US for vacations, airlines like American Airlines, Delta, and United are experiencing a decline in ticket sales. Popular destinations such as Florida, Las Vegas, and California, which have historically relied on Canadian tourists, are reporting millions in lost revenue. Hotels, restaurants, and entertainment venues that cater to international travelers are seeing cancellations pile up, further compounding the economic damage. Economists and trade experts are warning that if this boycott continues, the financial toll on the US could reach into the billions. What started as a Canadian response to unfair trade practices has turned into a widespread economic disruption, one that Washington can no longer afford to ignore. But the real question is the US government taking action to fix this, or is the situation only going to get worse? Trump's reaction and Canada's defiant response. As expected, former President Trump didn't take Canada's boycott lightly. True to form, he dismissed the movement as nothing more than political theater, brushing off concerns and downplaying its economic impact. Publicly, he insisted that the US economy was too strong to be affected by Canada's actions. But behind the scenes, it was a different story. Inside the White House, officials were scrambling, caught off guard by the intensity and scale of Canada's economic retaliation. Washington's first instinct was to fight fire with fire. The US US floated the idea of imposing even harsher tariffs on Canadian goods, hoping to pressure Ottawa into backing down, but the move backfired spectacularly. Instead of relenting, Canada doubled down, accelerating trade negotiations with the European Union and strengthening economic ties with the UK and Asia. The message was clear: Canada was done playing by America's rules. Desperate to contain the fallout, Washington attempted diplomatic outreach. Reports surfaced that US officials quietly reached out to the Canadian Prime Minister, hoping to de-escalate tensions, but he, backed by strong public support, refused to cave. He made it clear that Canada would not be bullied into submission, and any future trade agreements would have to be fair and balanced. For years, Canada had been patient, trying to navigate the shifting sands of US trade policy, but this time it was different. Canada wasn't just pushing back, it was pivoting away from the US altogether. Meanwhile, American businesses were sounding the alarm. Retail giants, agricultural lobbyists, and even Wall Street executives were urging the White House to take swift action. Companies that relied on Canadian consumers were watching profits slip away, and US investors were growing nervous about losing a historically stable trade partner. Business leaders warned that if relations weren't repaired soon, the long-term damage could be irreversible. But the most shocking twist: Canada wasn't just resisting US pressure, it was making bold moves to replace the United States entirely. Ottawa was fast-tracking trade agreements with Europe, expanding supply chain partnerships with Asia, and investing in domestic production like never before. What was once a temporary boycott was beginning to look like a permanent economic shift. The question now wasn't whether the US could stop the boycott, but whether it had already lost Canada for good. Canada's long-term plan: a future without the US. For decades, Canada's economy has been deeply intertwined with the United States. But now, with tensions at an all-time high, Ottawa is charting a new course, one that doesn't depend on Washington's policies or American trade deals. What started as a boycott has evolved into something far more significant: a long-term strategy for economic independence. One of Canada's biggest moves is expanding trade partnerships beyond North America. With new agreements in place, Canadian businesses are increasing exports to Europe, Asia, and Latin America. The Comprehensive Economic and Trade Agreement with the European Union is seeing renewed focus, while trade negotiations with Asian markets like Japan, India, and South Korea are accelerating. By reducing reliance on American imports and exports, Canada is ensuring that its economy won't be held hostage by US policy decisions. At the same time, Canada is making a major push for domestic manufacturing. For years, the country has depended on American supply chains, but that's quickly changing. Ottawa is investing heavily in homegrown industries, encouraging businesses to produce goods within Canada rather than relying on imports from the US. This shift not only strengthens the economy, but also provides job opportunities for Canadians, making the nation more self-sufficient in the long run. Energy independence is another critical focus. Historically, Canada has been one of the largest suppliers of oil to the United States. But with the ongoing trade war, Canadian officials are actively seeking new buyers. Europe and Asia have already emerged as key partners, with Canadian oil exports shifting toward international markets. This diversification reduces the risk of economic retaliation from the US and allows Canada to negotiate better deals on its own terms. Perhaps the most ambitious step is Canada's move toward tech independence. For years, Canadian businesses have relied on American tech giants like Google, Amazon, and Microsoft. But as concerns over data privacy, cybersecurity, and economic sovereignty grow, Canada is making a conscious effort to develop its own technology sector. More companies are choosing European and domestic data centers over Silicon Valley alternatives, and the government is investing in homegrown startups to foster innovation within its borders. It's becoming clear Canada is no longer content to play by Washington's rules. This isn't just a short-term protest or a reaction to a trade dispute. It's a calculated, strategic shift toward a future where Canada stands on its own, without being tethered to the economic decisions of its southern neighbor. The question now is, can the US afford to lose Canada as its closest trade partner?